Hello, everyone, and welcome to today's NinjaTrader ecosystem event, top-down approaches to manual trading and auto strategies. My name is Thomas, and I'm a platform representative here at NinjaTrader. Now, before we start the webinar, I have a few housekeeping notes. Now, this webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team using the phone number or email on your screen. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can get your free account by following the link on the screen and then clicking Get Started under the Welcome section. Now, before I turn over the mic to John and Mike, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And also, please remember that these training sessions are not a solicitation or recommendation, but simply educational in nature. Now, thank you again for joining us today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, John and Mike. Take it away, John and Mike.
Okay, so welcome to ZoomInProfit.com with the presentation Top-Down Approaches to Manual Trading and Auto Strategies. So our focus today, from experience as a community of traders working on the NinjaTrader platform, we meet daily and informally share what's working on our trade setups, and we'll bring some of that today into focus. And I'll highlight our experiences, and including a special guest, Mike Skeffington, or just Skeff, whose trading acumen has qualified him as an authority in the subject. And he will be presenting on building blocks for a successful futures trade in 2023. So Skeff will share with us a view that to me seems like the bird's eye view of the trading setups. And so our presentation will, as an overview, day trading futures, many choices, where to start, and one simple choice to get started. And then see what the bird's eye view is all about with Mike. So day trading futures, many choices. That's why I chose the top-down approach, because it's an overview of the whole pie and then focus on eating just one slice at a time, or taking what we can get. First, an analogy that this is a great view as a top-down, more like me 20 years ago when I went to Paris and all I wanted to see was Mona Lisa. But I really felt lost because no GPS back then. How do you find something that small? Where is the museum? And then the whole thing seemed like you have to prepare days ahead to be able to map out your directions to get to that destination. What would be today? So that was 20 years ago. What would it be today? I just started typing the word, and the 3 first letters already put me square into the museum, shown on the map, and then I can zoom in and get there basically in minutes, depending where I am, right? So that's how simple it is now to navigate compared to 20 years ago. And why is that a good analogy? Because it's precisely like finding a location of a trade. So when we think of our location on the planet with GPS, 20 years ago, very difficult. Today, very easy. And how about trading? How far have we come with our technical resources to locate that destination that we call target profit? So let's explore how Zoom-in Profit Systems can help you map out a likely successful trading journey based on some of the principles in the top-down approach. So where to start on the road? Let's just discuss the basics of our building materials, right? Markets and charts. There are so many markets, but you really need just one of them to make money. and good money. Yeah, we have the indices, the crude oil, gold, treasuries, and then we have Forex and crypto, but you only need to take one. So for example, ES or NQ, whichever you prefer. And how about charts? There's so many types of charts, right? Time chart, and then the hybrids. Some are native to the NinjaTrader platform. Some are what I call garden varieties, many wrinkle types. My favorite is the new bars, which is a custom bars that we use in our own trading. So here you have a choice of bars. Why is this part of the top down? Because you have to, the whole thing is really big. You have to go down, drill down to one. And so I have played with many types of wrinkles, and now I use only three: new bars, Z bars, and Nisa wrinkle. So the examples of a top-down approach most people think of is a higher time frame, looking at the big picture, and then the lower time frame for the trade location and trigger action. So let's take a look at it on this chart. This is a 15-minute chart of the ES, and where do you enter your trade, even though you have a good view looking back now with rear view mirror of this chart, where the trend shifted, to the downtrend here, and then it consolidated at the bottom. But when you're trading real time, you don't have the benefit of this rear view mirror. And so the big picture that people talk about, selecting a higher time frame, I haven't succeeded in finding a good match for the aspect of looking at a big trend on a 15-minute chart. Why is that? Because it needs a pullback, which may not happen on a strong trend. And then sometimes the trend is so strong that the pullback happens at the very end, and it will trigger you for a loss. So the big trend of the larger time frame, whichever it is, so in this case a 15-minute, which is good enough for day trading, I have not found this approach successful as automated trading. Now, for manual trading, you have discretion of certain choices of what you're looking for, and that is a different discussion. And maybe the approach that Mike Skeffington will bring you into for us today will give us a better perspective. But on an automated trading, that is my primary focus. The simple matter of choosing a higher time frame has not proven successful at all. And so how about multiple systems? So many of us have the experience of just laying indicators and filters and hope that those will work out by removing the fake signals, ended up with the successful outcomes. Who hasn't tried this approach? But the reality is too many filters just make more confusion and not real good trading. And so the ideal top-down view would include the trend, the pullback, the reversal, and the counter trend, and all of this along with price action. So to put all of this in one strategy, honestly, we don't have that one single strategy. So that's why I run several strategies in order to balance out each other. And today the next minute, I'm gonna present to you just a view of trend and counter trend. And then you would have the pullback and the reversal in between. But given the fact that we also need to hear from Mike today, my time will be shorter and will not be able to present all the details of all of this, but we do cover all of them one by one in our Discord. So one simple choice to get started, what would it be? Just look at the trend thing. So my simple approach at a glance is to look at a chart to see what the indicator is showing as trend, and then possibly look for the counter trend possibilities on that chart, and then how to capture both using the same indicator. In my example, it's the T-stop trend made by Nisa. And there are many varieties of indicators that are similar. So this, on a very flat day, as far as the lack of a directional trend, February 22nd for this example, it will still look for a small move in the trend of about 8 points, $400. And I look for only 1 or 2 per day, and the trend is stronger until about 11 a.m. And that's why this is a very narrow window of time. How is this successful? Per se, not really very successful. It has to go along, because we cannot guess what the market will do each day. I mean, the strategy does not have that capability of being able to determine whether there will be a strong trend or not. After the fact, we all know what happened, but before the fact, the strategy is not that intelligent. And so we need to put together the counter trend running on the same chart at the same time. So I'm a big fan of running multiple strategies simultaneously. And does the NinjaTrader allow this capability? I have worked my strategies on the automated pieces to be able to run simultaneously. So here we had, on the same day, February 22nd, we had that one short trade for profit, and then the counter trend later in the day at about 2 p.m. has an opportunity for entry on a day that it lacks a strong trend. So basically, it goes from the ideal trend, counter trend, reversal, and then some price action, which we put into the code of what to look for, the number of bars, the number of minutes, and filters with some other elements of Fibonacci retracement. So for counter trend, it's very important not to generate too many trades, because your account could get killed on one single day with strong trend. So my counter trend trading is limited to 1 or 2 trades per day. If the conditions are not there, then there is no reason to fight a trend. That is the #1 rule for counter trend trading: not overtrade, not fight a trend. And now if you want to trade more often, then there are lots of other strategies, both from my website and from 100 other vendors from NinjaTrader. But in order to keep my to limit my counter trend trading, that's how I have set my strategies. Obviously, you do miss days where it's wonderful. There are many profitable potential trades, but guess what? We cannot guess what days those will be. So most importantly, if you are new to trading, focus on something simple with just one indicator and watch its rhythm of trend versus counter trend signals by the same indicator, instead of overlaying indicators and over indicators. So I've developed a set of automated strategies with this approach. And why automated? Because it's possible to analyze the statistical data of past hypothetical results and execute forward trading on the same premises. And now, to elevate your game plan, that's where Skeff steps in to take you to a much higher degree of engagement with all the elements of the charts. So the bird's eye view presentation of trade setup. Let's welcome Skeff for his presentation on building blocks for a successful futures trade in 2023. So Skeff, please take over.
Okay. Let's see. Right about now, you guys should have me, both audio and video.
Yes.
All right. Thank you, John. Thanks, Thomas, for all your help. Thanks, everyone, for logging in and sharing some time with us late in the day here. I know some of you would probably still be trading if you weren't here, so I appreciate it. Thanks to John for inviting me. For those of you who know John, you already know this, but those of you who don't, I refer to John as the automation king. John is tireless in his drive to develop new products, to constantly back test and bring forward improvements to the current products that he has. I, on the other hand, am on the other side of the table. I'm a discretionary trader. So let's kick this off. We'll get right into it. I'd like to remind everybody that the Discord channel, actually the Discord server, is TP Guide. Sounds like Take a Profit Guide to me, but TP Guide, Discord server, and my room in there is Trade Devils with Skeff. We'll get into why Trade Devils is part of the name pretty soon here, but let's get this thing underway. What we're going to do today is we'll look at some top-down steps for one type of approach, just one today. We'll keep it simple. We'll go to my tools. Those are the Trade Devils portion of things, and we'll just review a quick couple of building blocks that I use each and every day. We'll mark up a chart, which is one of the building blocks. I may do that a little differently than some folks out there. Others will probably agree. And we'll apply an edge. You can see what the edge is going to be. At the end, we'll review the result. All right, get this thing underway. And maybe for those of you who don't know me or aren't in TP Guide, you're probably thinking, who's this dude? Why is he even here? Well, let's start from the start. We all have a history. We all didn't come together as traders initially. That's me on the right side. That's my history for the last 45 years or so. I'm about 60 years old, and I've been a professional musician touring the world. Actually, that shot was from a recent gig we did up here in northern New Hampshire, which is where I live. Big old racetrack, about 1,000 people there for a cancer benefit. And I actually at one point ended up in Los Angeles for about 10 years making records. And at one point in that stint there in LA, I decided I needed a little something to jumpstart my engines. So I made a change. Bang. Started skydiving. In fact, I took that photo on the far right side there. That was done in 2000. I've done 6,389 skydives, about 5,000 plus wearing cameras and video. I'm very proud of that photo. That's the very first skydive where two genres of the jump came together, vertical flying and belly flying. You can see that's on the cover of our magazine, the Parachutist magazine. But other than that, I was a champion skydiver. In 1998, won the national competition as a cameraman for the four-way team in the intermediate class. We've all got history. Yeah, we weren't always traders, right? Well, at one point, I decided history's fine, but I needed to eat. Can't live having fun. Anybody who can live for an entire lifetime having fun hasn't made. But I needed to make a couple of bucks, so it was time for a little change. It was time for a real job. There's reality. So I picked up a gig in the mortgage industry, like a lot of other people. Life was great, man. I was 41 years old. My future was certain. After about 6 months working for a big mortgage company in Cherry Hill, New Jersey, I ended up managing the place. I had 120 employees. And I figured that, you know what, it was time to open my new place. I leveraged my house, opened a new place up. We know how that worked out. In comes 2007, 2008, and it was time for another change all over again. Seems to be a recurring theme with me, but change is inevitable, so I had to roll with it. So somebody made a suggestion on what I might be good at, and I didn't see it coming. I didn't know what was next, but there it is. I love that photo. Like all you guys, nobody comes out of the womb a trader, so we all do stuff before finding this, and then when we find it, we all have a common goal. So we'll talk about my trading history. I kicked it off with Forex. I've been a full-time discretionary trader since 2008. This May will be my 15th anniversary, and man, I'll tell you, it went by kind of quick. In that time, I've traded Forex, futures, equities, options, Nadex. Tried Nadex, that was totally different. And then back to futures. Futures are high powered. And if you focus on just a couple of instruments, you really don't have to be all over the place. The thing about the equities market was I didn't have to constantly scanning. With futures, I pretty much just trade indices, and that's the end of it. Of course, at one point, I also, like John, I authored several expert advisors from NinjaTrader 4, spent 3.5 years doing that, and really missed being a discretionary trader. So I came back to the fold. So let's fast forward. We'll get into this thing now. 2020 was a pivotal year, historical, actually. It was the pandemic forced us into our homes, and a lot of people were staring at their computer trying to figure out how to make something out of it. We ended up with an unprecedented number of new day traders. And as a result, system trading got really, really huge. And everybody knows from, cruising YouTube, all of a sudden, it just seemed like there were 500% more people selling something, putting something together, most of which was, snake oil, to be honest. But I did cross paths with somebody who had this charting package called New Algo. And when I crossed paths with him, the developer was in the beginning stages. So I kind of followed the development of that system, and I liked it. I liked it a lot because watching him show me trades, it was really relaxing. And I'm a pretty quick scalper by nature. So I liked the concept of bringing New Algo in as another way to take trades. And then, of course, right around the same time, I discovered order flow. And we'll get to that. So, well, let's talk about the building blocks for a successful trade. I try to keep it simple, but my tools predominantly right now are Trade Devils indicators. Trade Devils is a company that has 80 indicators in one-stop shopping form on the internet. There's their URL right there, tradedevils-indicators.com. I was cruising around looking to make changes to my workspaces, and I stumbled onto this website. I was looking for an automated support and resistance indie that I could slap on a chart and let it do the heavy lifting. Well, not only did I find that, I found a lot of other stuff. I also use their order flow charts, their footprint charts, as anybody who's come into the room I have at TP Guide knows. And I use their auto trader. I do still use some automation, but very little, usually in a busy or aggressive market. I also use their initial balance indicator, volume profile, the auto support and resistance, auto Fibonacci, news indicator. They have tons on tons of them. And I love the fact that the two gentlemen that have that company are very supportive. Getting support for indicators is generally very, very easy. They have a Discord channel, very accessible, easy to work with. New Algo is a big part of my charting, my trading life. And there's the web address for that. And of course, TP Guide, the reason we're here, the Discord room. No cover charge. Come on in and have fun. And there's one of John's URLs there. So before I forget to mention, TP Guide. Anybody comes into the Discord, we get you a discount code for everything at Trade Devils. They've been kind enough to get behind us, and I thought I'd share that with you. Anybody comes on in, just hit me up. I'll get you a discount code. All right, there's the tools. There's the tools in work. To make this easy or easier, I decided to go with a 4-chart layout here. The top half of the screen is the new algo charting system. John referred to using a longer time frame for the establishment or the understanding of the prevailing trend. That's what you'll find on the upper left side. We'll go into that. Let's just focus on the upper left chart. Everything I do, I generally go left to right, top to bottom. So that chart there, I don't know if you can see my cursor. There you go. That chart there is starting right there on February 24. Obviously, we're in a downtrend. So this for the ES, the new bar's 21, which reminds me of the Heikin-Ashi type candle. It's a little different. You'll see that she turns red on the downside, and we also have a wave. Anybody who's used to Ichimoku knows what waves look like. That shows us the prevailing trend. The fact that the price is far away from the wave tells us that it's fairly strong. And also there are bands in the new algo that show us roughly a 2 standard deviation level on the outside, typically on the outside of price when we're trying to make things work. So my typical bread and butter trade is to establish the trend and trade into it with a quicker or a smaller brick on the right side chart. For the purposes of these demonstrations, these are going to be a little bit different. These are going to be pretty much calling tops and bottoms and looking at pivots. So focusing on the top left chart again, we can see that after a nice downtrend, we had a little sideways activity, a little bit of congestion. And things became a little bit uncertain. If you look at the histogram, you can see we didn't just have a big old red section. We were cycling a little bit. So come over to the faster brick, which is the top right chart. And it looks like what we were about to see was possibly a setup to the downside. Wasn't quite there yet. I still had a green histogram, but this is a fast moving chart. Okay. Moving to the bottom left, I noticed that we had a pattern here which might shed some downside. So what happens next is I basically go to the footprint charts and I look for your basic entry. Is the footprint chart telling me that delta is up or down? So that's just a broad look at the tools, and I bring them all together here in a sec. All right. Here's the prep. I do 3 things every day. Right when I come in the morning, I mark out support and resistance. I do it every day. The hardest day to do it is Monday because obviously you have the weekly and there's a lot of changes that happen, for Monday morning. The second thing I do is I look out for tells, anything that's going to tell me market direction or patterns, maybe a double top or bottom, or anything of that nature. And then I try to apply an edge. So for now, let's see. Let's minimize this sucker. We're going to mark a chart up. And here's how I do it. Some of you may do the exact same thing. Others may differ. I like to use wicks and peaks, pivots, to give me information during the course of the day, or during the course of the week for that matter, that is actionable. I also use these levels to stay out of trouble. Now, you'll see there's a couple of levels that are already printed. That is the Trade Devils automated multi-time frame support and resistance. I have it set on, for me personally, on a very sparse set of criteria, so it marks out really strong levels. You can see that this is a weekly chart, so these are really strong levels, the very top, the very bottom, and that's 3 years of data. So starting with the weekly, and the most important data to me is to the far right, because that's closer to where we're at. I won't use the current week and mark that out, but I try to mark out levels that have commonality, and let's let it rip. There's one there. I'm going to work my way right up, looking for pivots. It's another, that's close. I won't be fine tuning many of these because in the interest of time, we'll need to move pretty quick. Then up to the top pivot here. Remember, weekly, that's a weekly chart. I will mark this because it helps establish a range. That one's taken care of, all the heavy lifting done by my Trade Devils support and resistance indicator. Here's another one. This level here, I'm going to mark up because 2 candles, which formed a tweezer top at one point, even though it's not a legit tweezer top, it's not approached from the bottom, it's still a key level. So there's that. And then here we have a level I'm going to mark out simply because it's some form of regression.
Mike, just a quick interruption.
Shoot.
There is a possibility of you increasing the full size on the screen of the chart. Basically go to full screen because people are having a hard time seeing the
Oh, okay.
It doesn't project full.
I am on full screen. Interesting.
Go to full screen, and if you find anything that says full screen, that's where you should click.
There's nothing in the ribbon.
All right. Well, someone else says it looks fine. So maybe someone else might not have the proper
resolution. Usually,
resolution.
This is strange. This came up earlier today in the room. We had some resolution issues on a trader who installed an indicator.
Okay, most people said it looks good to me.
Oh, good. Good. Cool. So we'll just push through. So you can see that this upper peak is handled by Trade Devils, and several of the more key levels are as well. But remember, weekly is a monster. I mean, like the weekly chart is a monster. If you see a lot of times, what I recommend, I leave them the same size and the same color. A lot of folks make them a different thickness. So if you put up a weekly line, you may, want to just get inside, make it thicker. That way, when you see a weekly or a daily come up, it's more important. So moving on, and I'll probably pick the pace up here. These won't be completely accurate, but you'll get the picture of what I do each and every day. Again, I look at the most important is the third of the screen that is to the right side. Okay, we've got some tune-ups to do. I would probably tune this level up and that level there after doing the weekly. It's not quite at the pivot. We'll get her situated there. The reason why this is important is they come up constantly. During the course of the trading day, these levels prove critical. I'm going to try and leave my cursor near what I'm thinking and why I'm marking it. So that way, you know a little bit about what's going on here. All right. Things are good. And you can see that some of the previous marks, the demarcations for the weekly chart are coming into play. So we're getting there. And back here, I'm not even going to mark that stuff. Okay. These are all daily. From there, I switch over to 4 hour. Load that up. Give it a sec. Bang. Here we go. And one of the things I do, it kind of helps, is I scrunch the chart a little bit. That way I can get more data into a kind of a smaller area. That's a key level right there. I like this one. And up to the pivot, right where the cursor is, there's a pivot there. And you can see it's got shared interest with groups like this and groups to the far left of the chart. I'll place my cursor back there and look to the left, all the way across the left side of that chart. That has shared interest. You can say the same with stuff right here. How important is that pivot? Well, it's pretty important. I'll mark that out because it creates a range. That could be a range of consolidation at one point. And then I'll do the same up top. Boom. And from there, I don't really care about demarking these as much because if they're not sharing something in common with where I'm working on the right side of the screen, it's not really a concern. Then over to the 1 hour, I do the same thing. This is like a rinse and repeat process that if you do it each and every day, what happens is when these levels come up, you know not to trade into a perilous situation. In other situations, you find that when you see price touching one of these levels, on let's say this one here on the way down, If I look over at my footprint chart and it's starting to develop positive delta to the upside and it's a strong delta, that could be a perfectly good bounce, and you can maximize the amount of gains that way. These are things we go over constantly in the room. I record pretty much every trade I take, and I post them inside the room, the TP Guide server in the Trade Devils with Skeff room. So look at this beautiful head and shoulders. That's awesome. Don't remember if I traded that one or not, but we're going to mark it out. Top and bottom of the shoulder. Let's call that the bottom there. And last but not least, 30-minute. I don't do anything faster than that in terms of periodicity, because the Trade Devil system does it for me. Look at that. We're looking pretty good. Between the Trade Devils and what we've marked out, we've got all the pivots pretty much within reason. And I would go through this and tune some of them up, kind of tighten them up. So that's pretty much, stepping stone number one. I do that every day. And the good news is, come Tuesday, Wednesday, you really don't have to do much. You're just basically tuning lines up a little bit to make better sense of how you've labeled them. Okay. So what I do also, before I move on, if you double click inside Ninja, if you double click right here, you can assign these lines to all charts. If you don't do that, it's only assigned to this chart, which is fine. Sometimes I do that, but for this portion of the three-phase stepping stones, I want these to come up on all charts. And I do this on ES, NQ, MES, MNQ, as well as the CL and the MCL. So it sounds like a lot of work. The first time you do it, it kind of is. After that, it's super easy and it's fast, and you got them on all your charts. All right, let's head back here. So stepping stone number one. While we're doing that, we were looking for patterns as well. That would be stepping stone number two. If I saw any double tops or bottoms, inverted head and shoulders, I'd make note of that. I might even write it down on a piece of paper next to me just to remember. Let's apply the big edge. There it is. This is my new passion, and it's kind of become a craze in trading. There's a lot of this going around right now, but putting this together with New Algo and a couple of other tools, this just becomes the icing on the cake. I mean, this right now is what's driving most of the trades that I take. It definitely points out the what I call the trigger point, where I pull the trigger on a trade. You can see with, for instance, candles such as the one where my cursor is right here. There are gobs on gobs of signals about on top of that candle. And what that means is short time. And it was proven, in time, that trade went short for sure. And that was at the top of a regression band. So what's a regression band? 35% of the time markets are in trend. So if you only want to trade 35% of the year, that's fantastic. But if markets are not trending 65% of the time, we have to know how to identify that and how to trade it. Footprints are a deadly way to trade inside a regressionary area, which is exactly what you're looking at. All right, let's dig into an example here. Here's that 4-chart layout again. So on the top left, I read left to right, top to bottom. So on the top left, that is the E-mini S&P, 13 new bar. 13 is not the longest I use. I use a 21 to establish overall trend, but in this case, I liked the look of the 13 for this example. And remember, I said we're going to be looking for call-in tops and bottoms, right? Well, the 13 plainly shows that we're in kind of in an upside trend. If you look at the wave, trading against that ordinarily would be a bad idea. However, and it may be hard to see, but right at my arrow, there are what we call in new bars trading hollow bars. And that indicates a lack of momentum and a lack of drive. There's no impulsivity there. So I started thinking, well, maybe it's going to reverse. Come over to the top right chart. New Algo shows 2 signals to the downside right there. What is that? What is that white, that straight line right there? What that means is the developer built in the ability to recognize tops, double tops, and bottoms. And technically that is a double top, but because the New Algo doesn't inherently use wicks, a little bit harder to see. So the demarcation is that flat line and a big arrow over the top. Brings up a point I'd like to make. New Algo is completely customizable. Your charts don't have to look like this. They don't have to have vertical lines indicating that the histo is changing or any of that stuff. This is just the way I like it to look. You can see at the top of that chart, one of the type of resistance, support and resistance lines that we drew is right there. There are others on the bottom, and we use that in the room all the time. TP Guide, and the room is Trade Devils with Skeff. So I started thinking, looks like a downside move might happen, but given this data on the top half of the chart, it's not enough to be actionable. So typically I run a 1597 tick all the time. Tick charts are transactional information. That's why it's important to me. And if you look right in the right where price is, you'll see there's a double top on a 1597, which is a pretty powerful chart. Down below that last impulsive bar, there's a support level. And you can see the initial balance as is demarked by trade devils there. But if that breaks the neckline, we're in for some downside, at least to the volume weighted average price, the VWAP right there, which is that red and green indicator. So the next if then go to thinking brings me to the bottom right, and I look over to my right side and look at the candle that we had. There is more information on that candle than I need, probably twice as much to take a short. And so I'm going to zoom in on it and we'll talk about what that candle meant. Keep in mind, this is all happening at the same time. It may be difficult to see in static form, but in the room we do it. And when I record videos, you'll see it all happen live. So here's a close-up of that candle. Let me tell you what's on the top of this sucker. A lot of footprint packages point out stacked imbalances. I mean, that's pretty much bare bones. That's basic. I call that skeletal. The Trade Devils system, when I first found this, I flipped out because it gives you tons of information either above or below the candle. And that tells you directionality. If the signals are above, directionality is downside. So here, on this particular candle, that is a delta trap on the top. I think of delta traps this way. If the candles prior to this highlighted candle are to the upside, it's potential that we have trapped buyers. If all of a sudden we get negative delta, and we did, we turned the corner pretty quick, it looks like a pivot, at the top of the regression area, I'm going to be less likely to buy because regression means it's going to stay squeezed inside. So we got this massive candle with the delta trap on top. Next down would be multiple imbalances throughout the course of the candle. The next signal is that delta was at its highest at the bottom of the candle. Next is delta was falling. That's the little arrow there. Inverse imbalances, reversal imbalances, stacked imbalances, and volumes in sequence for at least 5 rungs of the ladder. And it also gives you signals down on the bottom in case you miss that stuff, or if you're getting eye fatigue and you stop reading the data up here. By the way, the bottom number there is volume 2321. And what the bottom insignia means right here, you have an OA. O is for falling delta, A is for the trap. So that says go short. There you go. There's the end result. I took that trade. I was actually on that trade. Typically on the ES or the MES, I look for 5 handles and I basically get out or crank my stop down, follow the stop and do a little bit more distance. If I can get better than 5, I do. Lately, it's been a 5-handle market, so I'm comfortable doing that. And admittedly, I did not get out right where it's demarked. I waited one more candle. Thought I might have blown that one, but the trade gods gave me this one. We revisited the low part of the trade. And I got out there. Let's do another one. Rinse and repeat. Top left, I read left to right, top to bottom. Again, S&P with the new bars 13 brick. This time, we have plainly an upside trend. We have a 4-bar reversal pattern in the new bars in new algo. That is a reversal pattern that's built right into the package, helps you envision whether or not price might cruise through and change the trend. Come over to the top right. You see a little bit more granular approach. I can't really see which brick size that was. It's probably an 8 or a 5. Fast moving. And right at this point in time, I noticed the histogram had printed and we got a 4-bar pattern. There's one signal for short. We changed the new trend, which is that arrow there. This little dot is a diamond, which says the uptrend is over. And then, of course, price action and the histogram fired to the downside. So my curiosity was piqued. I dropped down to the lower level. Let's look at the tick charts. This, while it may be a little bit sloppy, this is a head and shoulders pattern. Price worked its way up from the bottom, got rejected at VWAP, made the shoulder. Tried it again. Buyers came in, tried to force it. Kind of got rejected for a second, then went past. Made the head. Got rejected here. Institutional players came out of their longs, maybe even reversed their position, brought it back down to VWAP. Down below VWAP, made a shoulder. Hard to imagine, but if you use your imagination, you can see these patterns. And these are reliable. If triggered, they run 90% of the time or better. So at that point, I was okay thinking short. again, not trading into the trend, actually calling pivots, which are a lot harder to try and call tops and bottoms. When I look to the footprint chart, once again, look familiar? Lots of commitment to traders down at the bottom there, 1,358 on the commitment to traders, short. It's colored red. Nice shaved bar, no wick on the bottom, no indecision, none on the top. And we had demarcations again telling us to go. So let's zoom in on that. The signals above this bar on this footprint chart, multiple imbalances, delta strongest at the bottom, which is good because we're looking to go short, stacked imbalances, and volumes in sequence. It's almost the same, and it is not the same trade, not even remotely close. I don't even know if it's from the same day. It was in the same week. There you have it. So, whoop, don't even know how that happened. There we go. So, there's the bar that made it happen. Minus a negative delta of negative 1393 after having upside delta just a couple of candles before it. So, clearly the potential for a pivot. I entered there, brought it all the way down. Took 5 handles and got out, which is a good thing because right around here, obviously buyers came in and wanted to shore up the bottom side of regression. If you look at the bottom of this type of chart, and this is the one I call the edge, remember, even after I entered, things improved to the downside. We had delta falling further and adding more signals with each new candle. Notice the bottoms of the candles are shaved bars. There's nothing came down, tried to get to a lower level and got rejected. So took it down 5 handles, get out. Rinse and repeat. Same type of stuff. Nothing's 100%. Although footprint chart trading really, really does help pick quality trades and to stay out of ones that haven't really developed yet. Let's look at another one. Left to right, top to bottom. Here's the new bars 21 on the top left chart. Price making its way. Eventually became a pretty strong uptrend. You can see how the green band is there saying, hey, stay long. But up comes a 4-bar pattern. We end up getting pretty serious drive bars to the downside, and it started feeling like the last example. So I came over to the top right. Notice that at this time, we had a histogram firing to the downside. From a discretionary perspective, I thought to myself, okay, looks like we're going to have another pivot. Well, here's where the problem started, and we'll come back to this. I looked at the 1597, and because this bar was shaved, even though I neglected to think, we're into a common area here, and it's trade devils tried to tell me, you're into support. I came over to the footprint chart and I got a little pushy, tried to force this one. I had a great bar on the footprint chart with some good signals. There it is. Second thing I overlooked. Notice it's not the charts failing me, it's me. The second thing I overlooked was look how this is tucked into the volume nodes. The footprint chart from Trade Devils has a volume profile built right into it. This thing, although it's trading down with some impulsivity, is trading right into a high volume node. Below that is the point of control, demarked by this blue line. Well, what's the point of control? It's the area on this chart where the most volumes were traded. So even though this is moving to the downside, it's probably creating a great opportunity to take a long. And because we had a delta sweep and good commitment to traders, I went short. I'm not perfect. And there you go. There's the end result right there. So that was my entry. I came down immediately. We got a reversal. Imbalances were reversed, and the delta, this signal here told me to get out. I got out before a full stop, and that again I give credit to the footprint chart for doing right there. So while they're not 100%, they certainly do add a serious edge after you do your support and resistance, after you look for any message from the market that you have something coming that you may want to trade. When you go to new algo for market context and actionable charts, check it against the tick chart and then look over at a footprint chart. It gets a lot easier. And as a result, your consistency goes up. Well, we know what I missed, and here's the way it panned out. If you trade down into support, get ready for a bounce. Okay. I didn't hang with it long enough to do that. I went right to the footprint chart and assumed that we were going to have a continuing downside. Everybody's human. These charts allow you to get a lot more consistent at no matter what trade method you're using. There's so much information. And again, the footprint charts from Trade Devils, just like New Algo, are completely customizable for what you care to see. If all you want to see is momentum, you can set signals to only show you momentum signals. If you want to see the house, every signal possible, which is pretty much how I trade, you can set it that way. All the coloration, all the color schemes, everything completely user definable. So Let's take that whole concept to the absurd. I'm going to go to one chart, which is when I started with New Algo, I traded one chart. That's it. That's all you need to. You don't have to trade a 4-chart system. So this is kind of taking it to the absurd. How many times could you have entered this? That chart is amazing. This is one day. So if you look at the bottom margin, knowing Ninja the way most of you do, that's 8:30 in the morning on the far left. And the last price on this chart is 15:59 p.m. Eastern. So that's essentially one trade day. And to take it a step further, I don't know if this annotation works here. Let's see. I don't know if I can draw on this sucker. We don't need it. I don't really need this. Hey, it does. Look at that. Let's mark this sucker up. I don't know if that's going to work. But here in this box, right where my cursor is, if you guys have studied Dow theory, you're seeing a repetitive cycle of Dow theory right here. I really would like to use this. Let's see. Pick that. Make it yellow. Not going to work. Any tips? Yeah, a little practice would have been good. Doesn't matter. We'll move on. Just below the arrow of my cursor, right there, we have a consolidation. This is called accumulation, where upside and downside orders are accumulating. That's followed by the blast off, where the squeeze itself actually explodes upside, and we have public participation. I refer to it as acceleration. So we have accumulation, acceleration into excess, where institutional traders get out at the top, and then distribution. Suddenly institutional traders see an opportunity to take it back down. They jump on. The people that were long either reverse their positions or take their loss. And then you have panic. People panic sell and you accelerate to the downside. And then you end up in despair. So we have acceleration, accumulation, distribution, panic, despair. And if you look at the repetitive nature of that Dow cycle right there, 1, 2, 3, it happens again. 1, you bugger. 1, 2, 3, happens again. Accumulation, acceleration, distribution, decline, despair. Despair becomes accumulation, acceleration, distribution, decline, despair. Accumulation, acceleration, distribution, decline, despair. So on down the line. That particular slide represents a lot of opportunity, especially since it's one periodicity. That is the 64 brick New Algo. Just like in other careers, markets ebb and flow. Every business does. We need to be nimble and informed. Let's circle back. How do we do that? Well, in my case, it became TP Guide. I discovered TP Guide because of their affiliation with New Algo. The Discord room is awesome. Mine, in specific to discretionary trading, is Trade Devils with me. There's my name. And if you come on in, we got a 20% off discount code for all Trade Devils indicators. Should you decide that you like them, no, you're not obliged to buy anything. Nobody's charging you anything. Just come on in and hang out with us, see the way we trade, check out videos. I have a couple hundred videos already up just in the last few weeks. There's the Trade Devils URL in case you want to just kind of do a little shopping there, see what they got. 80 of the best indicators in one place that I've ever seen. But come interact with us in this, whether you're going to hang out with system traders that are trading automation or discretionary traders in my room. And that's where John's going to be at a lot. TP Guide is his baby. And like I said, I refer to him as the automation king. I, on the other hand, am not. I do use automation occasionally. I did all day today. I enjoy it very much. The automation that I use is set up for the footprint charts. Pretty amazing system. And below you there, you'll see all of John's URLs for all of the things he represents. So I invite you to come share your experiences and learn from others. We want to learn from you. We'd love for you to learn from us. It's a give and take in Discord, and that's what the way it was intended to be. So this has been the top-down approach. I know mostly that I did, rather than show you continuation trades, which are really my bread and butter, I decided to make it a challenge and show pivots. Because if we figure out a way to call tops and bottoms, we explode into the regressionary area where we can make a lot of money when the market's not in trend, that 35% of the time. And that's who I am. I'm Mike Skeffington. I'd love to have you in my room. There's the name of the room right there. Now, John, why don't you take it back over?
All right.
It's all you, buddy.
Yep. Thank you, Scaff. That was a great presentation, and certainly I'll be working with Scaff throughout this year, hoping to automate some of those concepts.
Oh yeah.
Previously, I said that simply putting a larger time frame, like 15 minutes on a chart for trend, that alone will not make you money. And Scaff showed a lot of that goes into it. It's a lot more than just looking at a 15-minute chart. It's about support and resistance and all the concepts that he discussed. And he will cover those in details in the Discord. So why our Discord? Interact directly with fellow traders from all levels of trading proficiency. So basically, we have a system in place that nobody will be left behind. And total transparency. So we're not making videos about making $10,000 a day. No fake results. It is what it is. We know trading is hard, and we have all the transparency that you can expect.
If I might, John, to that extent, folks that are in this webinar right now know that I post every trade. So occasionally I post my losers. Quite frankly, losing is part of trading. And I review the videos and literally openly discuss in Discord what went wrong with that particular entry or that trade, or whether or not I tried to force it or is revenge trading. We all have the same emotional responses. The mission is to limit those. But how many times have you cruised, I don't know, YouTube, for instance, and seen somebody who posts, one video a week and it's a great day? Well, in our room, we post a lot every day, and you'll see some stuff where we scuff up. For the most part, very consistent wins. And also in the new algo room as well. The new algo has its own room and aside of mine, and then John has several where he shows up as automation. But that's key. No cherry picking of charts or fake results. John and I agree wholeheartedly. Integrity's of the utmost. So thanks for letting me in there, John.
Yeah, thank you. And so the feedback you get also on prop firms, that's a big thing right now. Instead of risking your own capital, you can put a little bit of money and take a chance on see how things work without compromising your finances. But which prop firms and how to handle that? Well, every one of those prop firms will have their marketing advertisement that they are the greatest. However, from our first-hand experience, user experience, so in our Discord, you get the word feedback directly from traders just like you. So you can trust the opinions of others based on personal experience rather than marketing. And here's something interesting that Darkwing Duck, that's his handle. I know his I know his first name and by last name for more than 15 months because he's been a client and a very great guy helping us. His handle, Darkwing, said yesterday, there is something for literally everyone in this Discord. Aggressive, conservative, swing, scalp, different chart methods, it's all here. So for you to experiment, and we'll guide you one item at a time so that you are not going to be overwhelmed. The Discord link is here, and I will also post that on the chat in just a minute. Here's the prize of the day for the 1,000th member, because we now have 950 as of this morning. And coming up now, 1,000 member, whoever joins at, we do have a record of the number of people who join daily, and the sequence and order that's kept by Discord. The Discord system will show who the 1,000th member to join. And so here's the link, and you will get the ZBox lifetime license, which is a system that we launched recently, and you can trade that both manually and automatically. The automated piece does not have a trend filter yet. That's something I'm working on. So we just launched a month ago. And so I have a lot more work to do on ZBox. But so far it has been really great. Several people have shown their prop firm accounts that they got to pass evaluation using ZBox. And so 1,000 member will be the lucky one. So the remarks about discounts, we have a 20% discount on subscriptions, and you can go to the website zoominprofit.com. So 1 week discount on this on the subscriptions. And for lifetime license, it's 25%. And if you get the combo, that's a 30%. And also there is an additional 5% discount if you can pay by IBAN in Europe, euros, or anywhere in the world that you can use wise.com and send euros. I'll give information on that if you email me zoominprofit at info@zoominprofit.com. So all the remarks now about the presentation will be back to you in the form of questions and answers that Mike and I will be answering. So while I was presenting, Joseph asked a question regarding why counter trend. So my focus on counter trend as far as automated strategies is we have 65% of the market in range or counter trend mode, not really strong directional trend. So there's a lot of opportunity to make money on counter trend. However, generally, you end up giving back all of the profits in that 30 to 35% of trend days. And that's why I said you have to be very, very selective of not over trading counter trend, because so one reason counter trend does not work, it's not because it doesn't work per se, it's because you give all the profits back and more on the trend days. The trend days are only about 1 out of 3 days, or sometimes 1 out of 5 days, but those strong trends will take money away from what you made. So it's not a preference, it's an opportunity that there is 65% of the times more opportunity for trading counter trend. It's just that you have to be very selective in not over trading, so that so not over trading also means that you're not going to make all the money possible during the time of counter trend conditions. And all of that is laid out in our Discord with the specific discussions of each strategy that is based on counter trend. So it's not a preference, but it's a matter of opportunity on a selective basis. So now let's see what questions we have here regarding.
John, check out David Eaton. He says, I'm logged into Discord. Do I need to verify somehow?
Our verification is very simple. It just says you agree with the rules. So basically, compliance, we have compliance that you just have to click say, yes, I agree with the rules.
Too easy. Any questions you guys have, fire them away. Put them in the text box.
And
I feel like I'm on Jeopardy.
so let's go back here. So I have to scroll back a little bit and see where we are with the questions. So going back on, so someone has already posted the TP Guide Discord. Let's see.
You can ask questions about anything you saw or heard here. That's why we're here. Fire it away.
All right.
I'm better not working on a script. I'm better working free form. So anything you guys want to ask or get answers to. By the way, we do my number one bread and butter trade when it's available is returning to trend following. I crush it when the market trends. The numbers I'll put up are well, you'll see in the room. Right now in a regressionary market, we've been grinding away in that room, and things have been good, but a little bit harder, So that was another reason I wanted to show you guys that we can call tops and bottoms with the tools that we have. I got the bitchinest tool belt out there with Trade Devils and with NinjaTrader in terms of the onboard stuff.
Yeah, so there's a question about, tell me more about Zoom In Profit. Zoom In Profit has been around for over 2 years, 2.5. I started out with Ninja.co, makes lots of indicators. And then 15 months ago, I opened up to with my customers to explore other vendors, other products based on user experience. All we wanted is what people's own experience, not what the vendors are saying. So the whole thing about Zoom In Profit, besides whatever I create, is about what other people tell me that they are having a good experience. And that's why I joined with new algo. If you have the, if you had access to my history of that, it was discussed with users, and that's how I decided to join New Algo with the creator developer Chris, because of user experience. And so I'm open for user experience on any algo from other sources. We discuss them openly and candidly, and also our own users. I'm collaborating, helping several of our traders to develop their own tools. And if something comes up that is worth commercial grade, then it will bring up to the rest of the group. And so there is a lot of collaboration that you don't have to do everything alone. You can bounce your ideas off each other in our Discord. And so the Discord is part of the Zoom In Profit organization.
There was a question there about bands on New Algo. Faster brick size, smaller brick size. Yeah. I mean, I adjust. Essentially, I like to keep bands on the New Algo system around 2 standard deviations. So most of my templates that are saved come up at 2.0, and I'll move them based on recent or historical data. If I look at, let's say, a 5 brick on the ES, I'll scroll back a few days, and if too many times price busts out of the standard deviation bands, and that's how I refer to the bands, I adjust them. I don't want to know every time something pops out and isn't profitable. I like to know that something popped out of the band, made its 2 standard devs, and it's going to do a 4-bar pattern, like a reversal back into the trade. So I do adjust my bands individually.
Yep. And so if anything fails and you don't get the answer from us here or have a problem with Discord, you can email me at zoominprofit.com. I'll set the email here. There is a question regarding.
Ken asks why NQ versus ES or CO GC. You might be referring to the discretionary room. NQ, when it works for you, is a monster. I mean, I put a trade up today. I don't think I was in for 15 seconds. And it took 15 full points, if I'm not mistaken. I did a 10 handle trade, a 15 handle trade, and one other abbreviated trade where I exited due to some data that came across my screen, and the average hold time on those trades was about, I don't know, 20 seconds. So I find that ES meanders its way. Not always. It's got super volumes. So when you get into an ES trade at precisely the right time, the same can happen there. But I like NQ for that reason, Ken. Hopefully that helps. I haven't traded a lot of oil recently, although I have ripped a couple of good ones on oil in the London session.
So there is a question about how many contracts to recommend for a 25K MNQ and daily profit. We are not personal financial advisors to recommend a specific account size and contract size. So just as a matter of playing on the safe side, you don't have to start with full scale. So the MNQ allows you to trade with just 1 or 2 units, regardless of how much money you have. My idea is whether you have $5,000, $25,000, or $1 million, if you are not making money on 1 or 2, why go 10, even though your account allows it? So it's the way of scaling according to your personal experience as we go. There is no rush. So if you trade for 1 week with 2 micros, then you can move on to 3, 4, 5 and make use of your full account as you prove yourself, instead of trying to force trades based on capital base.
This is like an age-old question, isn't it, John? I remember asking that question like a million years ago, and it was because I found somebody who I thought I could rely on and get an answer back, and this person did me the service of actually not answering. His way of putting it was, go with what you're comfortable losing. Some people have an unbelievable tolerance to take financial pain. I'm not one of them. I'm an emotional person, and a lot of trading is realizing who you are internally and psychologically. So I explain it like this: when I'm fostering anybody into the fold, position yourself so that when you have a loss, it's a paper cut. How many paper cuts can you take during the course of a week and feel good on Friday night? So if you set up losses to be what you would refer to as a paper cut, that personal aspect then protects you from, getting blasted on if you have 3, 4, 5, 6 consecutive losses, God forbid, in a row. So set yourself up so your loss is a paper cut, because you can take 10, 15 paper cuts in the course of a day and you won't really care.
Yeah, yeah, thank you. That I remember that one.
You like that one? I got a million of them.
Well, I guess we have to thank those who are present with us, and also thank those who will be watching this later on recorded. I appreciate very much, and especially that Thomas and the whole crew with NinjaTrader ecosystem have been very, very helpful in getting us to this day and this preparation. And so moving forward, we hope for a great year and see you on the other side. Our Discord is open, and most of all, you are always welcome, because we play things on a very laid back. We're not making videos to make huge emotional effort of selling you something. We understand that trading is a tough business, and so we want to take it very seriously. All right, with that, I also want to thank my great presenting partner, Skeff, today, and
you're
look
welcome.
forward to greater things as we go on working on this journey to benefit us all.
You bet.
Back to you, Thomas. Thank you very much.
All right. Well, thank you again to John and Mike for taking the time to share with us today. If you enjoyed today's sessions, we hope you will join us in future webinars. Follow us on social medias for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of Zoom and Profit and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.